Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects, and then it tops. And this is the monthly D mark, and we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away, which would match to me with the 9.13.13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and ushering in the next phase. You know, what I talk about, the second phase of the banana zone, which is really often alt season stuff.
Raoul discusses Bitcoin's dominance in previous market cycles and suggests it may soon top out, with indicators signaling a liquidity shift. He believes this shift could lead to the next phase of the market, which may surpass previous bull runs. Powell also highlights the increasing importance of altcoins, like Solana and DeFi protocols, which are benefiting from growing adoption and institutional interest. Powell points out that global liquidity, especially the weakening US dollar and changes in interest rates, will play a crucial role in shaping market movement. He encourages investors to be proactive in taking advantage of these shifts, as Bitcoin and Ethereum are expected to lead the way in the coming month. Despite market volatility, he predicts strong returns ahead, particularly in the crypto sector. With key economic indicators like the ISM index pointing toward an upcoming recovery, Powell believes significant opportunities are on the horizon. As liquidity drives market trends, he stresses the long-term value of networks like Bitcoin and Ethereum, which have outperformed traditional assets due to their adoption and technological growth.
And they will need to do something sooner or later. And so it's whether you can stomach the volatility that comes with this asset on the way to the overall trajectory, which is liquidity up.
And, you know, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, you know, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, you know, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like, China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar. And the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing. Because we've both identified it's like next 3 months, for sure higher. There'll be consolidations. Next 6 months, probably next 12 months. That's kind of how it feels. Pretty certain. Now, the question is whether it's next month higher, which I actually think we probably end up, you know, higher within 2 weeks' time than we are today. Put it that way. Global liquidity means that a lot of it's going to be driven by the dollar, which is now trending lower. And if it breaks kind of the 100 level, it can move down to, in DXY, it can break, you know, it can move down to 90 or so, which would be, you know, a good cyclical dollar bear market in a structural dollar bull. Then we've got the central banks and others, and that's driven probably by China, the US, and others, I'm guessing. Using other liquidity measures within that. So, you know, China's probably the big one in that, but Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects. And then it tops. And this is the monthly D mark. And we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away, which would match to me with the 9.13.13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and ushering in the next phase. You know, what I talk about, the second phase of the banana zone, which is really often alt season starts at this point. And we've had 7 of these corrections since the bottom. And the last cycle we had five in the last year of the cycle. And sorry, the one I look at a lot is 2017. We had five of them that were all like 30% plus. So
we're all petulant children. Like we're just never happy, even though this asset class is like delivering over the long term, or at least Bitcoin is anyway.
Yeah. And then so we bottom over the next 4 weeks, probably more sideways than sharp down. Obviously, alts probably still continue to bleed for that period of time because Bitcoin needs to reestablish itself. Coming out the other side, we've got a lot of discounted stuff. DeFi is one of the areas that's kind of front and center for you. Anything?
Yeah, because it has the fees, it has the uses. So if the thesis is right, then DeFi should do really well, and it's the only sector or any sort of DApp sector that's really gained traction so far. Do
fees matter in speculative phases, or is it a disadvantage? It's kind of an advantage over a long-term value accrual, but often anything you can't value, like brand new protocols or memes or whatever, tend to outperform in the periods of market kind of euphoria.
Raoul discusses how Bitcoin has maintained its dominance longer than expected, but market indicators suggest it may soon top out. He believes that altcoins, especially Solana and DeFi protocols, could be poised for significant growth as global liquidity increases and the US dollar weakens. Powell sees the next few months as a crucial time for investors, with potential surges ahead, driven by expanding institutional interest and network adoption. He also points to global liquidity and the depreciation of the US dollar as key factors for the crypto market's future. With the ISM index signaling recovery, Powell predicts that the next year could see major gains in cryptocurrencies. Bitcoin and Ethereum are likely to continue leading, with long-term growth driven by technological advancements and adoption.
When I look at it in another way, is take that as accepted, and what you tend to get is every one of these falls 70% after launch.
Yeah.
And then that's when you got to do your work.
Unless you're in
this interesting?
And it'll rip.
Yeah, because if it's interesting and you buy it down 70% for its first correction, or 80%, whatever the number is, that's when you can make some real money if you get something that has real activity and catches a narrative. Yeah. So the best thing is don't buy these things on launch.
Then there is less money recycled into treasuries. And so I think that is just another impetus for the Federal Reserve to come kicking and screaming to the party, the way that Besant
and Trump if you listen to Trump and Besant and everybody, they're like, first get the dollar down, get rates down, get oil down, get the tariffs done, get some tax revenues coming in from that, maybe give them out to some people, the bottom 50%, whatever it is that they do with this. And then it's about growth because they need the economy growing. And Besant has been really clear about this. Is like, we need Main Street to be making money again. And the issue has been rates have been too damn high. And they need to get the ISM through 50 and accelerating higher, which is the classic sign of the next phase of the cycle, which is when liquidity is really happening, the business cycle's happening, earnings get recycled, people start taking risk. That all lies ahead. But because the ISM is still bottoming, which is unbelievable, it's the longest bottoming pattern, I think, in the history of the ISM now, it kind of almost certainly pushes the cycle into 2026.
Yeah.
Which means we've got 12 months ahead of us. Because people, I think, mentally in their heads are like, oh, well, I want to start getting out by October because, and so they keep getting worried we're not going to make the price returns. But we've got a year to make price returns. And the last year of a bull market, we've often seen 2, 3, 4, 500% returns. So here's Solana weekly again, 9, 13, 9. That was the top. We're counting down to the weekly 9, which should come in any day next week. So it tells us a potential low. When I look at the daily, this brutal collapse from 280 something back down to 115. Again, we're now at a 7 count, would give us another 2 days. And we would have a 9, 13, 9 bottom. So we're really starting to set up in many of these. I think Sui on a weekly as well was a perfect 9 signal. We're now looking where we might be this is the daily. We're on a 10 of 13 and a 6 of a 9. So it feels so close to me that we're at the capitulation time that you and I spoke last time back in September. You know, and the forward-looking liquidity stuff looks good. And this is basically what I've always talked about when I talk about network activity and Metcalfe's law. This is a much more detailed way of establishing how vibrant is the network, how real is the activity, what's the longevity like, what's the growth like, because these are the things that drive price. We know that obviously global liquidity drives price, but the other thing is the network has to be valued. And network value is what drives the long-term secular trend above and beyond that of liquidity. This is the magic of why some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the NASDAQ. And so the NASDAQ is 97.5% correlated to, or it has an R-squared of 0.97 to global liquidity. And Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption. My mental model for ETH is that they've built, because of the layer twos, massive redundancy in how much the chain can be used. And because of how the fees have been allocated, it makes it look particularly bad. Do you track the overall volumes of the EVM system and see what that looks like? Or, my guess is the overall volumes aren't suffering. It's just the fee layers suffering.
Yeah.
And it just means that we need more activity in ETH because it's so big now and its capability is so vast that you just need a shit ton of activity like the financial system.
Raoul Pal discusses Bitcoin's dominance in the crypto market, noting that it has lasted longer than expected, but technical indicators suggest a potential top. He highlights global liquidity, a weakening US dollar, and the actions of central banks as key factors that will drive the market forward, setting up for a new phase. Altcoins like Solana and DeFi protocols are expected to see significant gains as Bitcoin's dominance fades. Pal emphasizes that the success of the crypto market will depend on network value, adoption, and liquidity. He believes Bitcoin, Ethereum, and other assets will outperform traditional markets due to growing usage and network strength. Investors should focus on identifying the right assets early as the market structure evolves in the coming month. How will global liquidity and the weakening dollar impact the crypto market? Which altcoins are poised for growth in the next cycle?